When establishing a business in Nigeria, selecting the appropriate legal structure is one of the most crucial decisions entrepreneurs must make. The legal framework you choose not only affects how the business operates daily but also determines liability exposure, tax obligations, fundraising capabilities, and long-term sustainability. This video explores the two primary business structures available in Nigeria, highlighting their advantages, limitations, and suitability for different business scenarios. Sole proprietorship. The sole proprietorship represents the simplest and most common business structure, particularly among micro and small enterprises in Nigeria. This structure places both ownership and management responsibilities on a single individual who assumes complete control over all business decisions and operations. Advantages. Requires minimal paperwork and formal registration requirements. The owner maintains absolute decision-making authority. All business income flows directly to the proprietor. Changes to business operations can be implemented immediately without consulting others. Limitations. The proprietor's personal assets remain vulnerable to business debts and legal claims. Capital acquisition is restricted to personal resources and loans. The business exists only as long as the proprietor remains involved. Transferring ownership can be complex. Sole proprietorships work best for small-scale operations, businesses with minimal liability risk, and entrepreneurs testing new business concepts. Examples include local retail shops, service providers like barbers or tailors, and freelance professionals. Limited liability company. A limited liability company represents a distinct legal entity separate from its owners. This separation creates a legal shield that protects shareholders' personal assets from business liabilities. Advantages. Shareholders' financial risk is restricted to their investment amount. The company can own property, enter contracts, and engage in litigation independently. Funds can be raised through share issuance and debt financing. The company continues regardless of changes in ownership, often viewed more favorably by clients, suppliers, and financial institutions. Limitations. Requires formal registration with the Corporate Affairs Commission, CAC. Necessitates proper documentation, including articles and memorandum of association. Must adhere to corporate governance rules and annual reporting requirements. Both company profits and shareholder dividends may be taxed. Limited liability companies operate through a structured governance system. Shareholders elect directors. Directors establish company policies and appoint executives. Executives handle day-to-day operations. Profits are distributed as dividends according to shareholding percentages. This structure suits businesses anticipating growth, those with significant liability exposure, ventures requiring substantial capital investment, and enterprises planning for longevity beyond the founder's involvement. The choice of legal structure fundamentally shapes a business's trajectory in Nigeria's economic landscape. While businesses can transition from one to another, making the right choice right away is best to save the extra costs and headaches. If you need help registering your business in Nigeria, or just understanding what the best legal structure for your venture would be, click the link in the description to contact us today.